The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the October, I wrote it, 10th, 10/12. I enjoyed writing that. Just fitted the fingers very nicely. And thank you, Steve, for 2 great hours. And here at TFNN, we have programming all day, as most of you know. If you've tuned into Tiger TV1, which is what you will see right now for the show, archived in Tiger 11, I believe it is, you will see the charts that I'm showing right now. Let me just do this. Let me get this back up here. This is the 120-minute. Where did it disappear to? Oh, that was a quick turnaround. What happened? Ah, there it is. This is the ES Mini. Is what I show subscribers every single day. And what I've shown was that there was, in fact, left side. These are technical tools that I've developed. Just dozens of them. I love to have a very, very large Sears and Roebuck, because it's not Sears and Roebuck anymore. We're going back to the old Sears and Roebuck days. Large toolbox. I want to be able to look at whatever is needed. If I was building something, I wanted to know that I've got the plane, I've got the sandpaper, I've got the varnish. I just got everything ready to do whatever I need to do. Chisel, the right chisel. And in this particular instance, there's a plumb line that I drew at a 6 highest peak, a peak F. That was with a question mark, because that's what I did as I sent it out early that morning. It was at about 8:40 for that next 2-hour position, and the E-minis, that's the S&P December E-mini trade futures. And it hit 1466. Actually had 1466.00 as a round number, double top. And what you want to see when you get to the 6 highest peak, if it is a peak, if you want to see the technicals fail, in this case the stochastic made a right shoulder failure pattern. MACD tried to do a little bump but couldn't hold it and went negative very quickly. And you want to see black candles immediately after that. And that was a terrific sell signal. It went right through the pink area, which I had drawn as resistance. So it went right to the bottom. It came back to revisit, to say, hey, goodbye, everybody. We're going down. I forgot to say goodbye. It happened so quickly. And then it plunges, and the S&P goes all the way down to 1431.25 at 8:30 on the 9th. Now let's try to rally. And it's had a kind of pathetic rally. It's only gone to that 1430, what did I say? It was 1431 level, to a high today of 1437.75. And it's kind of it's really struggling. The technicals are attempting to turn up. The MACD is nearly going to cross positive. It's trying to. The stochastics at 21%, over 20%, but taking a long time to get there. I have one technical indicator that says if the E-minis are able to get above 1437.50 and hold, that'll be the first time in 2 days that there's actually been a sign of strength, because there's a divergence between the low of the stochastic at 10:30 on the 8th and the low of the stochastic at 22:30. That's it's 10:30 last night, and that would be at 7.98% in the stochastic. So it's rising. So we'll see what happens. In the meantime, let's go to the nitty-gritties of the market itself. I'll run the numbers down. I'm going to be here for 2 hours. I'm doing Larry's show today as well. And most importantly, what I'm looking at here is that the double top that was made in the 120-minute chart and the daily says we've got to be careful of the technique that I call the double top. It's called a drop bucket pattern, where the price pulls back 1/3 to a halfway between the lip, left side lip, and the cup trough. Because that says, if you do that, there's a really good chance that pretty soon you're going to test the low. In this case, it would be the low of 13,367.27, made at 11:30 on the 28th of September. So let me just go through the numbers so that I can get everything done today. Dow's minus 45 at 13,428. The S&P is only down 50 cents at 1440.99. It's fascinating that Dow's been much weaker than the S&P. And that's what I've been talking about for a while. When I was interviewed by Tom last night, I said, I've got a little baby bear coat on. And the reason is there's a huge divergence going on. It's been going on for about, I'd say, 6 weeks, where on any particular day you can have the Dow much stronger than the S&P, or the next day the S&P is way stronger than the Dow. That is very unusual. They usually travel within, I'd say, within 0.10% of one another. So if the Dow is down 50, the S&P would be down minus 6.10 or 6.20. On the upside, it would be plus 50, 6.10, 6.20. That's the kind of ratio that I like to see. So this tells me that in the case of the market, it is absolutely stock specificity. If you are short the IWM or the Qs, fine, that's been great because they've been following a downtrend, and certainly the Qs have been related to Apple. So the gold index is down, gold contract is down 80 cents at 1764. Silver's up 0.06 at 34.06. I have the same kind of signs going on in the gold and silver contracts. I think there's a divergence there as well. For a little while, one's been stronger than the other instead of working in unison. And I'm looking at the gold price, and I'm saying, I think there needs to be some kind of a consolidation. It might just be a consolidation. It might be something deeper. But at this particular point, I'm really looking at the upside possibly being limited. That's the way I'm looking at it. Platinum's down 8 at 1679, but high-grade copper is up 40 cents at 372. And here again, copper, it's starting to pull back. It is still way above the lows, but it's not giving a sign of strength. It's giving more a sign of circumspect. It's giving a sign that says, I'm just in a narrow trading range. And now T-bonds are doing the same thing. Bonds are down 54 at 121.41. That is the TLT, Lehman 20-year T-bond fund. But what's fascinating about this particular ETF, it should really be at 123.80 to 124.30. So am I looking at bonds and saying, the Fed might be supporting it, but we could now be looking at another Fed intervention, whereas it was always the dollar that I've spoken about for years, saying that I believe that when there is strength in the dollar, you don't really see it because the Fed is determined to keep it low. Therefore, it does have rallies, which should be much bigger, but they're not. Are we now looking at the same situation in T-bonds, that bonds actually are really weak, but they're being held up by the Fed? And the Fed is saying, hey, we promised you we're just going to keep pushing money out. We want that interest rate low. So we'll do our best to maintain at least a sideways move with not that much to the downside. But now we might be seeing not that much to the upside. That's a big question I've got there. I believe that by Friday afternoon at 4 o'clock, I've already got the perspective in my mind, my mind's eye, let's say, what I'm thinking, what I'm looking at. But I believe that the weekly chart's going to give me a lot of evidence in the TLT coming up on Friday at the close for the weekly chart. And crude oil is up 92 cents at 93.31. So it's 877-927-6648 is the number to call. And I'm going to push it a little bit. I really would like to hear from folks who are living outside the United States. And the number there is 1-727-445-1044. Let's give it a push. Let's see if we can get some country folk out out there across the ocean, or it could be Canada, I don't care where, but let's use that number. So I want to go through a couple of things. Look at this Apple chart. I have a webinar coming. I have a 2-day live webinar coming up. It'll be advertised very soon. That's for level 1. Level 1's usually 2 days, and level 2, the advanced one, is a single day. That's coming up live for those of you who have done one of my level 1 courses, whether it was on the webinar like last in January, I believe, or live when we do it one-to-one, eyeball to eyeball, rather than live webinar. That level 1 needs to be done, and because I want you conversant with the ChapmanWave, I want you to know that it's yours, that you're coming in with ideas that are yours, and then we're going to put together something with all the new concepts and the new the refining that I've done in these various technical indicators that I've developed. For instance, I got the sell signal. I was warning about it recently in Apple. It hit 705 in peak E, the fifth highest peak on the 21st of September. And what I had said is any pullback underneath the 9-period moving average, that's that maroon-colored moving average right there. I've expanded it out. This is the daily. Would say to me that there's a really good chance that Apple might be making a top of some significance, especially if the 9-period moving average becomes a resistance line. It's just hard to believe, but look at this, if I can find it. Is it behind you? Give me 1 second. 120 minute. 120 minute is right there. Just look at this chart. Apple, in the 100-minute chart, the 2-hour chart, I love these signals. There are certain candles that I developed. There's something that I call the silent candle. Why is it a silent candle? Because if you had to scan for new highs and new lows, you wouldn't see it because it occurs somewhere else. It's not the bar that makes the high, and it's not the bar that makes the low. It's a silent candle. It's giving you a signal that says that a whole Master Trader series where I discuss this in great detail, and I'm going to do much more in the next one coming up Thursday, 2 weeks. Look at the front page of TFN. There's an early bird special. If you use Tiger Dollars and you also get the special, it is just an unbelievable bargain because it's just a fantastic price. I especially wanted it because I love teaching, and this is going to be at Babson Executive Conference Center here in Wellesley, Mass. Thursday, 2 weeks from today, the 25th of October. Now look at this. Apple gives a great signal, and especially a wide doji candle on the 12th of September. This time it just runs up, it gaps up, it goes all the way to a peak F as the technicals are fading, and then it has a right shoulder spike like a rogue wave that goes to 705.95. But wait a minute, if you didn't know to look inside, you wouldn't have seen that at a low of 704 round number and a close of 704 round number, the next day it opened at 704. Kaplop. And that's what it does. It goes all the way down to 623. I'll be back, 877-927-6648.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
This edition, and I just typed into the den that I'm looking forward to having a lightning round here. So we've got a number of charts right there, and I was looking at them. I just want to finish up with the Apple. Apple says that it could bounce here, and it could bounce towards the trend line resistance in the 120-minute chart, around about 646 to 648. That's going to be key. If it powers above that by this afternoon or tomorrow morning, then the selling is being ameliorated by a bounce. I have to right now call it a bounce because of the daily chart. And that says 657 is a 200-period exponential moving average, but it's between 651 and 658. That's going to see, Apple's going to see the greatest resistance. The 9-period moving average trend line is at 653 on the daily chart. So that's that. And now I want to go straight to Ari in Arcadia. Hi, Ari. How are you?
I'm pretty well, Basil.
Good.
I got out of silver wheaten.
Okay, so now you're out of silver wheaten. Let me go to my black background charts because that has silver wheaten. You know, it's interesting that you got out at this particular time. And when I did the charts, the most recent chart that I had was an instant restart in the daily, but I had an alternate wave count. The alternate wave count was working out, but I always like to keep in place the alternate account until it runs out of letters, which would be always a G. And if that's the case, it went to A, B, C, D, pulls back, and then it makes that pattern that I call, it's like a right arm extension, which is also like a rogue wave, because the technicals are failing, the price is moving lower, and then suddenly there's this one spike that takes it to a new recovery high, and that would be 40.28, 40.36. And what happens is, in this particular instance, it went to an E, and I have no other way of counting it, and this corresponds probably to what you're looking at, and I called it a peak F top. I'm calling it now a peak F top. I hadn't actually finished the notation, but if I continued with the alternate wave count, that's what it would have been at 40.91. Now, that 40.91 high on the 5th of October, folks, we're looking at silver wheaten. The symbol is SLW, and we have just one of our wonderful traders here, position players actually, Ari in Arcadia, who had the stock from way back, and he held it and held it and held it. It was basically walking the 9-period moving average until just recently it started to break down. Technicals are failing, and that says to me, and this is why I'm counting so many stocks. I love the fact that I can go through my charts at this particular time, and I can go through gold stocks, I can go through apparel stocks, I can go through other retail, I can go through all different sectors. But it's an amazing thing, because it's the psychology of the market, how chart patterns can not only repeat, but they repeat in completely diverse sectors. So the pattern that I'm looking at here says there's just a really good chance that there's a peak E being made in silver wheaten's weekly chart at 40.91 if 40.92 is not hit this week. It also says that the MACD, and this is what I've got in a number of charts, is still very strong at 95%, and the stochastic, the MACD is very strong, the stochastic is still very strong at 95%. So I would treat the exit that you've just made as something to monitor, because if silver wheaten, which is trading up 49 cents at 39.19, closes anywhere into the gap below 38.22 and 37.91 from the 26th and 27th of September, within that range, we're going to be looking very closely to see whether or not there's enough residual strength in the weekly chart to be able to have a flurry of action that says it's going to bounce between the low 37s and the high 39s, maybe even fractional new highs to just between 40 and 41, and constantly do that for about a week or two. But I think your exit is just perfect, because it's a very strict discipline. It says that if this is a peak F top and the technicals are weak, that we should be looking at lower prices. It doesn't tell you how much, because you need other indicators. But at the same time, I'm sure you also looked at the weekly chart that said there is strength there. So what I'm going to recommend is that you've got, first of all, congratulations. You've had a fabulous trade. You used your discipline. You also use the ChapmanWave to rotate into the next time frame, which is the weekly, I think, right?
That's right.
And now you've got a situation where it says the risk to reward says take my money and I can reassess for the next move. So hold on, because I would like to do a little bit more with silver wheaten, because it's a very important silver stock. And I will also look at the SLV simultaneously. We've got Ari online. We're looking at silver wheaten, SLW, and SLV. And then I'm going to do a lightning round with those in the den.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. Dow's down 58, S&P's down 2.76. Isn't that really interesting? Some Dow stocks that are actually UTX, one of my pilot light Dow indicator stock, four stocks in that little, I call it an index. It's G, IBM, Triple M, and UTX. Not doing all that great. Well, G is holding quite well, but boy, the fact that UTX is pulling back so deeply is disturbing. Well, we're on with Ari in Arcadia. So Ari, so the SLW trade, I'm going to say to you, hold off doing anything right now. And not only that, when you've had really nice profits, there is absolutely no reason just to dive back in the stock when you know that the upside at this particular point should technically be a little more difficult as it needs to breathe and have some consolidation. Now, what's fascinating is that the iShares Silver Trust, I typed in Silver Trust, was up 472% from the $8.45 low back in July of 2008, and going all the way to the 2011 high of 48.37. Silver still looks way weaker than gold. And the weekly chart has actually had a very nice move, but it hasn't been able to break above that doji candle of the week of the 2nd of March of this year, 36.44. So I suspect that there has to be a little bit more backing and filling in silver. If it closes on Friday afternoon below 31.80, the 9-period exponential moving average, that's going to say, hey, I used all this time, I didn't have enough strength to even get back Did it touch? Yeah, it touched the bottom of the candle of 32.90 because the last high was 33.23. But I didn't have enough strength to close above it or retest the right side price time match of 36.44. So at this particular point, just a consolidation is what I'm looking at. Now, what would break it down? If silver suddenly, and you have to wonder with the market as it is, and there's such hesitancy with politically and economically and strategically around the world, that is probably one of the reasons why gold has independently gone higher, with silver following. But you have to wonder why silver didn't do better in this particular rally. So the SLV is what I'm watching. If there is a close below, I'd say below 32.60 on Friday afternoon, there's a good chance that the low of 32.49 on the 9th of October on the SLV will be tested. So far, the technical indicators show no strength. So any rally should be a retracement failure mode that should come back and retest the most recent lows. And that would be that level that I just mentioned of yesterday, 32.49. So I'm going to say, hold off. If you do miss another spike, I think it's just a spike, and then it just means you've got a higher level consolidation. But I have to congratulate you in a fabulous trade. And you can see that your SLW, percentage-wise, has done way more spectacular than the SLV. So that's it. Are you going to just wait for it now?
Yeah, I'm hoping even to get A formed on the monthly, which would be at least 2 months. I'm hoping to get A on the monthly. Well,
folks, what you're talking about is maybe a single leg up failure mode, right?
No. I think it's going to go up. But,
okay.
We need to make an A. In order for the stock to be strong, an A should really be formed.
A peak A, you mean it has to have a lower high bar? Yes, okay, I absolutely agree with that on the monthly chart. And the weekly is going to give us a clue. Why? Because if in the rest of October the SLW doesn't close above, if SLW doesn't close above 40.91, we're going to have a lower high bar in November. But even November means you could still squeak to a higher high. You actually have to wait for the very last trading day of November before you can do anything. So, yeah, well, congratulations. Fabulous, not just a trade, but a position play. And call again. Love hearing from you, Ari.
Thank you for your help, Basil.
Thank you very much. Folks, okay, Dow's down 73, S&P's down. Now it's moving. It's down 459. I want to go to our first, let's see, we've got in the den. TJ asked about MOS. I'm calling this a lightning round, but I have to tell you something. This is funny. I picked up this Investors Business Daily Monday special, and I look at it, and I say, whoa, it's a little bit faded. It must have been out in the rain. It didn't dry very well or something. So I started looking at it, and I see it's got a head. It's got number one, Continental Resources, CLR. Number two, Ren Solar, SOL. Number three, Titan Machinery, TITN. MasterCard, MA. Potash, POT. SQM. Soquim Minara. I remember that one. Society. Anyway, Specialty Fertilizer. Graham Core, GHM. Bucyrus, BUCY. Arena Resource, ARD. Look at all the resource stocks here. GMX Resources, GMXR. Research in Motion, RIM, trading at 138. Pericom Semiconductor, PSEM. And then it goes CF Industries, Southwestern, and then finally, right at number 18, it says Mosaic Company, manufactures phosphate fertilizers, trading at 125.10. I thought, what on earth am I looking at? Monday, June the 2nd, 2008. I must have put it aside for a good reason. And then the front page says, Oracle has grown with big takeovers. What's next? And in fact, it's 5 years later. And there was a report just yesterday that said, what's his name from Oracle? Wants to slow down the, who has this wonderful boat. Someone was telling me that the boat went right by them. They were down in San Francisco at the big yacht race, and Oracle's boat went right by. So Ellison is his name. So isn't that funny? Oh, yeah, thank you, Terry. Right. Yes, I actually thought of that myself. It even says so right here, Larry Ellison. And he said he's going to now slow down on that. He says spending slows as inflation eats gains. Pollution firms roll despite weak growth. So now let's look at Mosaic. MOS, so much for the lightning round, huh? MOS, it was trading in 2008. Let's go to a monthly chart. 2008, it was trading at 128. Well, it went to 163.25, peak F top in the Chapman wave, and it plunged down to 21.94. Tell me that the technique of the Chapman wave going especially to a peak F with fading stochastics doesn't give you at least some insight into some potential hazard to the downside. Now it's traded as high as a peak D to the upside at 89.24 in February of last year, and then it pulled back and it's making an arch formation in the monthly chart that an H, lowercase h, can go to an arch formation, another one which makes an M, and it could even go to a third one, which could then break, test 39, or 43 to 39, the 200-period moving average, and then possibly could have a much sharper spike. So this is very important, because if it doesn't break to a new recovery high above 61.96, 98, let's say, that's going to be a problem. Peak D in the weekly, technicals are turning down. Let's go to the daily. The daily says it is right in an area. I'm going to do this. Oh, I can't do it because I've changed the colors. It's fill the gap. It's in this area, this trading range area of, color's wrong. Let me just change the color. Now, what to do? I'm going to make a suggestion, and that suggestion is, if you are in for a quick trade, that is a very short-term rally, the candle that was made yesterday is really important. And the candle that formed says that if Mosaic closes, it mustn't just get above, but it has to close above 55.02, the high of yesterday, and then it has to do it for a second day. And that second day says if it's a green candle, even if it's a bit of a pullback, it should at least try to test 55.57, which is the 9-period exponential moving average. But I can just tell you this, that if it closes underneath yesterday's low, 54.01, then this entire rectangle formation says, be careful, because 53.78 is the next key support. Under that, it goes to the gap all the way down to the 51.98 area. So what to do? My question would be to TJ, are you trading this? Are you looking for a bounce? I'm going to make a suggestion. That suggestion says, as I'm looking at it at this particular point, I see very limited upside. If you want to trade 2 points, there's nothing wrong with that if that's your position play. But if you're looking for a position play that says, I want to hold this from 3 to 6 weeks, like a big swing trade, I'm going to say to you, I see nothing yet that says to touch Mosaic, MOS, trading at 54.71, up 26 cents. Not just yet. As a swing trade, what I would do is, if you're interested in it, if you want to just nibble, and I really mean nibble, you like 20 shares, just a little bit, right here at 54.71, I would put a stop. It's so easy, because all you need to do is put a stop at 54.48, like a 30-cent stop. So it's like 0.8%, it's nothing. Because the reason is, if it starts to work, it means you're in the trade, you have some comfortability, you focus on it with price immediately, because it'll show up, and then you will see that if it closes decisively over 54.85, you can go to the next level, which would be 54, no, that's too high, 54.99. That's going to be the clue, because if it holds there, you've got yourself a nice little trade that'll go to the candle of 55.86, and that's where you can raise your stop. Now, what I would say, where would I add to this? I'd add another very tiny position. If by tomorrow, Wednesday, at 11:30, while I'm doing my show, actually, it's trading above 54.81 and holding quite nicely. But this is just a real quick trade. I wouldn't do anything more than that right now. Oh, that was more than a lightning round. Next one in line is Doug, DUG, and that was asked, Joe D in the den asked about it. So DUG, if I got this notated here, DUG, I'll just do it real quickly. So on the white sheet, you can look at it. White background. I cannot yet put an up arrow. I can put a plus sign. But what's interesting about the plus sign is it goes peak A, B, C, and if it goes above, I'm going to give you all the information in a moment, 20.84, the high today is 20.81. Folks, we're looking at the ultra-short oil and gas pro shares. What's important about this particular chart is the MACD is really very steady and moving higher, but the stochastic is at 65%. That says it means it's going to actually make leg D without giving a full buy mode. That is the buy mode in the ChapmanWave going to a D, but without giving a full confirmation. But as long as the MACD is holding well and these vertical lines, the histogram and the MACD is doing okay, I'd say that's a trade. Now, I suspect if you're in it, what you really want to be looking for is that the weekly once before made an ABCD. And there it confirmed, and as it confirmed at D, B, C, D. And as it confirmed, it gave the sell signal in the weekly chart in both the on-balance volume and the slow stochastic. Then it came down and made a lower low. It went down to 18.67. So I don't see very much strength in the weekly chart, not at this particular time. What does that say about crude oil? It says that in the crude oil contract itself, I'm going to go to the USO just for the moment. That's the way I like to relate it. The USO is in leg B up in the daily. It says it's got a very nice action going on right now. And if the USO is able to hold, so you are in the ultra DUG. DUG is ultra short oil and gas pro shares. And I'm looking at the USO, which is oil. So the relationship is, I don't want to mix because we're looking at the producers in the ETF, and I'm looking at the price. I'm just going to stick with the DUG for the moment and look at the DIG, which is the inverse. The DIG made a peak F, right arm extension top, at 47. No, it wasn't 47. That's an F. Change the color right there. So here we go. Oh, this is very easy. If the DIG, which is the inverse, the ultra oil and gas pro shares, you were looking at the short, if that takes closes underneath 47.67, right now it's at 47.72 and the low today is 47.65. If it closes under that, and it closes under that quite sharply, that says that the next level of major support will be 45.23, the 200-period exponential moving average. So, in other words, the DUG is acting very well. It looks to me like that it could climb a little higher, and then the 50-period exponential moving average of 21.37 would be my upside target. Yes, stay in the position. Let leg D play out. If it pulls back below 20.30, you've got to be a little bit careful. So that's that. Next one is Line. Now, this is very interesting. I'd never known about Line. I don't even remember seeing the name. Line is an IPO that came out of Lin Energy. I'm sure that Lin Energy has been around for a long time. But, maybe it has been. 2006. All right, from January of 2006. My daily chart showed just a little bit. So that says that the trading now at 40.52, down 95 cents. Let me go backwards. I'm going to go from the daily. The daily has made a ChapmanWave cup and ladle breakout formation. That formation says that at a certain point, if you make a cup and you go back to the left side lip, and instead of stalling there, you pierce it decisively, especially when there's a left side, right side price time match, and you take it out without stopping, without making that ladle. Remember, one of my least favorite patterns. You can go to a leg D to the upside. Then you got to be careful. I'll be back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, Then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Thomas Edison didn't invent the light bulb, he made it better. As the fourth most prolific inventor, Edison found that most people failed because they failed to realize how close they were to success before they gave up. Success requires a few disciplines, practice each day. When it comes to trading and investing, one of those disciplines is understanding and acknowledging the language of the markets. For centuries, Japanese candlestick charting has unlocked the hidden treasures of the language of the bulls and the bears, the buyers and the sellers. Candlestick charting is a tool, not a trading system. Candlesticks tell you when to enter, when to exit, and identify the risk and reward for every trade. Candlesticks identify market turns before they happen. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, and on Friday, October 19th, I'll be conducting an online one-day course teaching you the secrets of Japanese candlestick charting. Go to the homepage at TFNN.com and sign up today, because candlesticks will make you a better trader.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. Dow's now at 84. S&P's catching up. It's down 6.29. Next one in the den was Art, who wanted to know about Amarin Corp LC, a biotech company, which was once $14.25. That's not $14.25. That is $1,425 back in July of 1993. So it's had a little bit of a pullback, came down to $5, and so the situation now is that a biotech company, there's news that things are going to work, there's news that things are not going to work. No, there's a pattern that I call the dreaded H. In the next hour, when I do Larry's hour, I'll try to add some of the techniques that are on my CD. You see, this is the dreaded H in the weekly chart. It looks just like a lowercase h. If it closes this week underneath 1086 right now, it's at 1077, low is 1065. If it closes under it, and especially if it goes to 1020, there's a really good chance it's going to the nines, and that the 8.84 200-period exponential moving average in the weekly chart will be tested. Don't touch it. Next one was, yesterday I had a question about NAT, N-A-T, NAT was, what was NAT? NAT is, oops, wrong place. NAT is Yeah, that is Nordic American Tankers Limited. I said don't touch it because it could be going down, especially if it breaks the low of 9.26. It's trading at 9.15 right now, and it's got this just it is relentless. Now let me just do this. We've got a couple of more questions in the den. Let's see if I can get to it. PG, I think I skipped one, but let's just go to PG quickly. PG, you see, this is a defensive play. PG, Procter & Gamble, but even there, oh man, did I just lose all that information? Yeah, even there's a sell-off going on. If PG, which is trading at 68.35, breaks the 68 level, then the 50-period exponential moving at 67.76, which is also close to the 67.89 low of the 13th of September, kicks in. I don't like what I'm seeing here, and I'm going to spend, you know what, in the next hour, Larry's hour, I know that he likes to look at chart patterns because patterns is what he does. I'm going to show you chart patterns that are repeating, and, line, I didn't finish that, whoops. Line. So line made a peak D and it broke out, and there's a doji high, and it's trading at 40.31. Lin Energy LLC. But this is what I'm really looking at. The same pattern that we're looking at so many charts. This is an alternate wave count, possibly leg E in the weekly. And the stochastic's pulling back. If you are in the stock, why don't you make a stop at about 39.99? 40.37 is the level that it's at right now. Why? Because if by Friday it closes decisively underneath 40, somewhere around 40.60, the 9-period moving average, there's a good chance that even if it does rally, the trend is turning. So on some part of your position, I'd have a stop. Now, as far as shorting is concerned, I probably would want to see how it can bounce and if I can get to the 40.98 area. But the monthly chart says that there is weakness there. And if it in October, this month now, if in October it closes under 39, that's just not a good sign. So once again, I'm looking at a stock that at this particular point, the upside looks quite limited. It could go to 42 3/4, 43 and point 20. But my guess is that it's starting to tell us that it needs at least a sideways movement after a great run up. So that's my conclusion. And if you are going to short it, you want to short it, but you better put a stop in at about 41.63. That's a point and a quarter. It's not a big deal to put it there. Why? Because if it holds above that, it could just have one quick retest of the highs. But in the meantime, that's the way I'm looking at it. Folks, once again, 13,380, I'd said be careful. We close underneath that in the Dow. That's probably going to confirm for me that we've gone from a sell signal to a sell mode in the daily. The weekly is still holding quite well. I'll be back with Larry's show, and we're going to cover some of the questions I had in the den that I haven't been able to get to. And, hey, thanks for being here. Stay tuned for Larry Perseverant. That'll be me coming up straight after this as I sit in for him.